Hello, everyone. Happy CPI Wednesday. How's everyone doing? Good morning, Sterling, all in caps. That is a good morning, Sterling. Thank you again for putting in the earnings in the news. Good morning, Patrick. Good morning, McRangers. Again, yes. Good morning, Martinez. We'll get back to some of this. Let me get through it. Good morning, Jacob. Sterling, you're very busy with all the numbers. Thank you. Thank you, people who are hiding in the background. Lots of people watching in the background. Jump in and say hi in the chat. Let's just get to some stuff. I'm going to get these earnings out of the way from yesterday. GameStop was yesterday, was a beat miss. I did not look at it this morning, but after their beat miss, it was up slightly. Macy's is down because mainly due to guidance. And they've uncovered a lot of internal flaws with their accounting stuff. So guiding down significantly, and that is down. All right. But what's important? What's besides saying good morning to Anissa? What else is important? If you're not following me on X, please do at MG Arnold. I'm going to try to do some more screenshots stuff of key things that are going on, or at least to wrap up the day thing. But this morning, the key thing that's going on, besides Royal Palms jumping in the room, is we had the inflation rate. I want to know how this is a day, first off, before I forget to say it. I want to see if this rally sustains after the first 30 minutes on the open. Pay attention to yesterday's high, especially in the S&P, because it could be a rotation zone and a percent B buy. But the market rallied. The inflation data, it came in line with consensus, but this is the highest month over month since April, coming in at 0.3%. You have the year over year core inflation at 3.3. You have the headline number at 2.7, ticking up from 2.6. I don't know how the Powell's going to spin this next week with his cut to say inflation's still headed in the right direction. It's not headed in the right direction on any metric here that's printing. And it's been climbing slowly. And services inflation's already been very sticky. And now you have goods inflation starting to tick up, especially food starting to tick up again. So I want to know how they're credibly going to say inflation's still heading in the right direction, because now we have climbing again, hottest print since April. And it's not actually, it's stalled out well above their 2%. So I just need a sip of tea there. So that's where we sit with that. But the market's loving it so far. You have the mega caps up, you have Tesla up, you have chips are going through the roof. Broadcom, with I know Sterling put in that one. Hold on. Where is it? I got to roll on back. Yeah, Apple. Well, we have Apple watching ChatGPT, but I thought there was something with the Broadcom. Apple's working on an AI chip with Broadcom, I think. So that's where we sit. I think you put that in there. Good morning, Ted. Hello, Charles. What's this? Oh, oh boy. Now we're trumping AI. Now we're going to quantum computing. Okay, thank you. I'll try to keep them up, Jacob. If there's something to post, I'm not just going to post for no reason. Good morning, Heinrich. Good morning, Dark Screen Sleep. All right. So you have chips, you have mega caps, all rallying this morning. Everything's in happy mode except for healthcare. But if we look at our groups, let's just see healthcare is still positive, 6 basis points. But technology, it's definitely a buy everything day so far heading into the open. It's buy it all. That was a 2-day dip. We got a 2-day pullback. Look at this. The odds now of the rate cut are roughly 98%. Remember, just a few days ago, this was trading 65%. So you see hotter than inflation, in line expected, which was a bump up, but the market's saying, hey, Fed should just keep cutting. We want our rate cuts. Fear and greed index solidly in neutral. PE ratio 38.55. Absolutely no fear in this market. We already got, after close, we got Adobe today. Then that's really it. Besides, tomorrow's going to be big after close. Remember, we got the PPI numbers in the morning, but after close, you got Broadcom and Costco, Restoration Hardware, and nothing on Friday. So I put out the little. I'm still going to call them tweets. You know, we hit the bottom. We hit the bottom of the targets yesterday. Even if you went full on, I'm using the full targets on that instead of the conservative targets. Write down it hit either target on either side. I told you why I was using the conservative targets. We're now retracing, so that little doubles played out. Now here was the big bar of let's celebrate rising inflation. Yesterday's high is coming in right at this 6,075.25. So it has to sustain a move above there through the close to not only be a rotation zone buy, but a percent B buy. So that's what my eyes are going to be watching should we sustain this rally. This little bounce back. We're right against the 50% harmonic also from the retracement. So that's why I will be cautious unless it does follow through with a close above this. And what's the next key level if it just goes on a buying fest into the open and throughout the day is 60.84.25. You close above that also. If we did close above that also, then we're back to that 6,100 magnet price area, which then could take us into potential double top territory, which would be really nice because we'd have another pattern to work off of. On any pullback, the pullback area I'm paying attention to is right about 60, 68, 60, 70 on any pullback into the open. That's right in this area right in here, which we blew through with the hot inflation report. Where is my chat? There's my chat. Coco, why did you make such an asinine comment on the video yesterday about gold? Gold has intrinsic value. Yeah, Supercore CPI month over month 3.342. Supercore is still increasing. I'll check the monthly for you, dark screen. Yeah, that's Broadcom working on an AI chip with Apple. Yep, thank you. Things you don't hear at bottoms. Why is this a bad thing? Who cares? The flows are never going to stop. Completely expected. It's totally arbitrary. I saw that one. What an appropriate PE ratio to begin with? Well, the reason is now valuations are being they've been shrugged off for a while. The markets will return to valuations because it's the cost of money and everything else. And if you keep overpaying for earnings and look where price to sales is on a lot of these companies. You could go take money and put it in other things that are safer and get a decent rate of return. The problem is now everything's about the price going up, and the price can only go up so long. Everything is not worth infinite money. So at some point, that's where people shrug it off. They're trying to justify the flows. Now, as I've said, in the short term, it's still, buy everything. But know where your stops are. I mean, because could we easily rotate back up? Yeah. Yeah, rotation zone back up. We have to see. Just know, because when there's no fear, that's when you should be cautious. And when everybody's running for the hills, that's when you should be looking for opportunity. Right now, nobody's running for the hills. Everybody's chasing the penny down the highway against traffic. That's not the person I want to be. So, what else do we have? I already went through the pullback now. The key thing will be yesterday's lows, period, on any pullback. Other than that, I'd just be using these retracement harmonics. So if it pulls back below this 60, 70 area, then 60, 65, and about 60, 57 are the levels I'll be looking at. The NASDAQ, pay also attention to coming back down to the harmonic levels yesterday. So let me just move those out of the way. Coming back down to the major harmonic level. Remember, we did not have a double in the NASDAQ. I'm paying attention to 21,573. As I said, with even yesterday, I updated the harmonics a bit, but watch that 62.5. Watch that 62.5. We're flirting with it right now. We close above 21,573. The magnet price returns to 21,662 with an intermediate price of 21,618. Key support now coming in about 21,550. Then you have a pretty big void back down until I'll use about 21,485 and then back down to 21,441. The Dow's a long way off. Cycles are at the bottom. The Dow's a long way off potentially, but pay attention to yesterday's high. Still holding a flattening out rotation zone. But the first two I'd be interested in for bullish trades are the NASDAQ and the S&P, not the Dow. I will be paying attention to yesterday's high, though. And at this point, we have a very strong base at 44,260. So if that's taken out, then we'll also be taking out the rotation zone. And then the next target is 44,080 area. Russell, technically it would be a weak percent B buy and technically a rotation zone buy if it follows through with a close above yesterday's high. But that's not the first one, again, I'd be looking at. NASDAQ and Dow. VIX, number comes out, and VIX is dropping back down, back below 14. The DAX, so far, a sideways correction. A sideways correction. Again, the key level I'm paying attention to is about 20,250, but this is a sideways correction, getting still an overbought, but getting cycles on their way down. So this is a prime example still of a sideways correction in the DAX. My reminder, now we all do have a confirmed pausing bar, so the next key level on a breakout above Monday's highs would be 20,700. The notes rallying off the rotation zone. The yields pulling back a bit. Again, so again, inflation's back rising up, and the 10 years actually pulling back. I want to see how the 10-year closes today, though. Gold does see cocoa. Gold has, even if you shrug off and say, look, the jewelry and everything else, gold does have intrinsic value because it's actually used in manufacturing so you cannot say it does not produce anything. Gold is used to manufacture things. That's where you're completely wrong. That's not its primary use, but it is used. Therefore, it does have intrinsic value because it is used. And I'm not talking even in jewelry. So, Bitcoin has no intrinsic value besides the technology. Walgreens Boots Alliance is in talks to sell itself to private equity firm. We'll have to take a look at WBA. And what else? What else was I supposed to look at? Oh, Coco wants me to look at monthly gold. If there's another stock I missed, let me know. Dollar confirming but not triggering a double bottom yet. So the double is confirmed but not triggered. Dollar also pulling back after the inflation news. I'm just shocked that the market's okay, came in line with expectations, but the print is hotter. And the market's just completely shrugging it off. Like, we needed 5% inflation print to take it seriously. Natty gas also around. We have another little mini run up, but let's see if this sits there. Let me get to gold in a second. Crude, even rallying off this. By the way, before I forget, this has been something also. Pay attention here. I just want to show you this. This is the Thomson Reuters Core Commodity CRB Index. It's back at very key resistance levels, building higher bases. Just pay attention to this, because if commodities really start breaking out, and the key levels on this is, again, above 301 on a closing basis, but that would be significant. Pay attention to this in the back of your mind over the next few weeks. All right, now I'll get to gold. Here's your gold month. If my stuff comes in, what was your question here? Can you check monthly chart of gold? I see a monthly bearish RSI divergence. Is getting to a bearish divergence, but we have not confirmed anything yet. If we go and take out the highs and this does not, and then retrace, pay attention to the lows from November. The lows from November are going to be very key. But again, the trend is still up. We had the couple little buy things, and I put this out in a tweet too. We had the shake and bake and then the percent beat buy. Then we closed above the key level yesterday, which I identified before. Now the next targets, the 2736 and then the 2769. We still are in potentially a corrective phase with cycles going back up, a longer term corrective phase. But, you know, so far we've just had a sideways correction. Now cycles are going back up on the weekly, but getting back to a daily top. So this would be another area I'd be looking to raise the stops after the double buy signals. And then the key area I'm still looking at is the 2769. What if a meteor falls full of gold? Are we expecting a meteor full of gold? What if a meteor? Well, it depends how hard the meteor full of gold hits the planet too, Coco. Oh boy. Coco, I'm about to ban you again with your asinine comments. Good morning, Richard. I'm just ignoring Coco. Yen. Nothing much to talk about there. Nothing much to talk about the euro. Nothing much to talk about with the pound. We haven't looked at the pound in a while, ever since it finished its little double. Bitcoin still holding the rotation zone on a closing basis. So far, it's had a sideways correction, but weekly cycles are still headed down. But so far, just a sideways correction. What else do we have? We got the spiders, the spideys. After closing right at the, remember we did not have a double, but so we did the harmonic projections based off the shorter term harmonics, this little somewhat pausing area, coming back down, rotation zone on the 4 hour, and right closing right at that harmonic. So that's where we sit right there. Now we're going to use the retracement stuff. Pay attention to 605. 605.60 area, right where we're going to open. That's the 50% harmonic from the retracement. Then on a continued rally, 606.47. And on any pullbacks, I look at the harmonics. The Qs, let's get these out of the way. The Qs, 522.93, we're well above that. 523.88, we're above that. But that's the area on a closing basis. Next targets up would be 524.82, then roughly 525.77. So, Tesla closing in on all-time highs and the key harmonic. Should it keep running? It just wants to keep running. Dirt cheap Tesla. What else? Nvidia trying to pick up again. Let's look at Avgo. What else was I supposed to look at? Did I miss something? Oh, WBA. I'll take a look at that. Avgo. Why is my... I haven't updated this chart in a long time on this platform. Not a lot, just in a very toppy, multi-toppy area. Not any great setups there, though. WBA. I cannot stand that number. Walgreen Boots. So it has confirmed, but not officially triggered the double. That's a very flat double. But if they're going to take it private, I wonder what price they'd be taking it private. That would be interesting, but look at the chart overall. Look at look at the sheer destruction of Walgreens. You want to talk about complete corporate mismanagement? There you go. There you go. Anything else? No, I'm not seeing anything else. I'm just going to check back in the S&P. Going into the open with the raw celebration. Look at that. From the hotter inflation print straight to the harmonic. There is just nothing. By the way, on a pullback, the first level besides before this 60, really that 60-70 is going to be key on any pullback into the open. That's what I'll be looking at. And then remember to keep an eye on today's high. I mean, yesterday's high. Sorry, yesterday's high. All right, nothing else for me to do here. So I'll let everybody get headed off into the open. Thank you for tuning in. And remember, we got the PPI tomorrow. Unemployment numbers tomorrow. Let's just take a look again. Unemployment numbers. Make sure I'm not forgetting anything. The initial and contingent jobless claims and the PPI numbers. So that's really on deck. So everything, again, 8:30 Eastern time tomorrow. And then it dies down. And Friday's not got a lot of stuff. And we have no earnings on Friday. So tomorrow's going to be very interesting. And then remember, next Wednesday is the Fed meeting where Powell will have to lie through his teeth saying inflation's headed in the right direction. Do I see a monthly and weekly head in rum? Monthly and weekly. I don't. That's way too sloppy. Don't bother with it. Don't bother with that. Sterling, way too sloppy. And you're not reversing enough move with this, even with those wicks. So I would not look at that. If we look at the ES double from yesterday, I'm curious on the close deep if you have leave resting orders. I can leave resting orders near the completions of the doubles. Remember, I'm not trying to pick off the exact thing unless it's going to change into a pattern. But yes, like, you know, when I say if it's going to follow through with something above or below the 62.5, then I generally don't do resting orders. But with like yesterday's, why would I think resting orders would be a good thing? Well, you have the double that was here. And then remember, we're headed into the daily. If I put that back up there, just put up these, I'll put up those targets, it doesn't matter. If we look at that in the daily, where's this headed into? The rotation zone. So what am I still watching for? Rotations back up. So this is why I'm not trying to call everything. I'm not trying to catch an even bigger move. That's why there's double targets. So yes, resting orders are fine from that perspective. Now, let's say this double was out of the way. Let's say this was a bigger double top. Or let's say, I'm just going hypothetically, let's say we set up a bigger double top. Let's say this price action rotates back up, and then, you know, over the next week or so, we close back down below yesterday's low. Now, for this final, and then let's say we start triggering the double. For the final one, I'll be aware of it, but why would I might not put a resting order for this final target? Why? Because if this followed through then with a close below 62.5, that could be a trade that keeps running. So for stop lowering, you know, first target, maybe peel something off, and this double's not set up, by the way, yet, but peel something off right around with a resting order, right around this 50% retracement and the second target, if this were to manifest. That could be a resting order, but then the final one I'd be monitoring in case it really collapsed and went through to 62.5. That's be an example of where could use one resting order, and the second one I would wait on. Now, if we came between the 50 and the 62.5 and then formed a bottoming pattern in here, then I just take it off. Does that make sense? You're welcome, Eric. Nope, that's not. It's in people, you know. And I think be fearful when everyone's greedy, and be greedy when everyone's fearful. Did that make sense, Jacob, what I just said? Just let me know the two differences. Now I want to peek it since I'm still here. I'm waiting for Jacob to respond. All right, that's a very bullish tick opening. Very bullish tick opening. So as I said before, now what I watch for is where it's stable. We might get a little pullback here with the tick pullback. Then I'll be watching for continuation buy patterns in the short term. Unless we really start collapsing back below this this base right here. All right, you're welcome, Jacob. Thank you again for tuning in, and I hope everyone has a wonderful day. Oh, now we have another question. On doubles, I like to trade them in sixes and take two off at the first target, two at the second target, one at the third. That's how Sterling trades them. So that's completely it. This is why it's the micros are so wonderful, because you can put on these groups of sixes, and you can really tailor your account based off your reward to risk. You can put on, you know, 6 micros, 12 micros. You can put them on in chunks of sixes. By the way, I'm on Ninja again tomorrow at, I think, 11 Eastern. So with that, I shall talk to everyone later. Bye for now.